speaking to you, especially this early in the morning, at least for us. So great having you. Let me first start off by asking you this golden question, at least for us here back in India. How big is the transition, or how big is the development with regard to Anthropic and its newest product? Because it is causing pressure across the board. So I'm trying to understand how you perceive it.
Hey, good morning, Harsh. It's always great to join. And on the face of it, the update from Anthropic really isn't that big of a deal. You know, when I first saw the headline this morning in US trading, I kind of passed over it and sent it to my team saying, you know, here's another issue that software companies are going to have to face. And it's turned into something broader. I think, like Sajid said, I almost feel like the market is entering a DeepSeek 2.0 kind of version, where you have the self-fulfilling narrative of software is dead. AI is going to eat all of the software businesses, that feeds into selling. Your systematic selling then takes place, and you end up with really significant downside. I think the reality is going to be more nuanced than that, but you have to respect what's happening in the market. And it's very tough to look at some of these software businesses and say, yes, this is a trade that I want to step into, because all the Anthropic news does is further cloud, the ability of software companies to adjust, and it pulls forward the reality that there are AI models that are coming to compete with very basic services that software companies might be providing. So it's definitely not a time, I would say, to be a contrarian in the software space. But the spillover effect that's been more broad to semiconductors, to companies where the fundamentals are actually quite strong, that's going to create buying opportunities. And I think it's that separation of quality from the story. There's a lot of good quality companies that are being thrown out with the bathwater. That's where I'd be looking to buy, especially on the semiconductor side, where you're starting to see weakness infect the overall tech market as well.
Interesting. Matt, hi, morning. Speaking to you after the union budget presentation here in India. Curious to know whether it's going to bring the FIs back into India, and especially the India-US trade deal getting seeded.
Yeah, Ayesha, I think it's the latter that's really going to help on the FII side. The budget's not a game changer. I don't think anyone expected it to be. If anything, it just increases confidence in the fiscal prudency of the government, and that there isn't really any political pandering that's taking place. But the trade deal, I think, is a game changer with respect to sentiment, because it removes the uncertainty of companies that may not have been caught up in tariffs directly, but it takes away the uncertainty of those companies of what might be next. What's the next shoe that could drop? And so I think it's very constructive. It led to some significant short covering. There's a lot more to go. But I think if anything, it should help the overall earnings story. It'll be supportive of the growth story. And I think it just supports the idea that India is the place to supply chain from China, opposed to other Asian economies. And now the tariff levels support that narrative as well.
Matt, morning. Sajid here. How do you look at Indian valuations in the backdrop of what's happening? We have a now stable geopolitics. We have some resolution in the India-US trade. China and US are talking. Iran is talking to US. And from an Indian point of view, our earnings in the third quarter has been decent in that sense. Do you think that valuations now merit foreign flows back into India?
I certainly do, Sajid. And I think the story also becomes even more idiosyncratic, because India has always traded at a premium valuation relative to other emerging market competitors. And oftentimes that's deserved just because of the consistency of GDP growth and the consumption story with respect to India and English common law. There's a lot of reasons that I think justify the more premium valuation. It got extended. Earnings growth weakened. I think that's why you saw India underperform so meaningfully relative to the rest of the EM complex, plus a lack of direct artificial intelligence picks and shovels that markets like Taiwan and South Korea have. But now when you're looking at the market, valuation matters. We're seeing that in the US very clear, where value factors are meaningfully outperforming and higher momentum growth is underperforming really since October. And so I think that should benefit India, especially as investors look for someplace where you're getting growth, you're getting earnings growth as well. And I think a narrative that's diversified from just a pure play on artificial intelligence. So I think it's encouraging, and hopefully we'll continue to see more constructive dialogues, deals signed between companies, and I think all of that will help feed into changing the narrative and bringing more foreign investors into the market and keeping domestic investors happy and continuing to put money in as well.
Right, Matt, we'll leave it at that. Thanks as always for taking time out and speaking with us.